Hello everyone and welcome back. In today's video, we discuss everything to do with the stock, crypto, and commodities markets right now, including what just happened here on the stock market and why these commodities continue to go out of control. We'll be breaking down the key levels that you need to be looking at for the next couple of days into the next couple of weeks. See you soon. This one's sure to be good. So welcome back to our daily market recap show here for the 7th of March 2022. And if you like anything to do with stocks, cryptos, or commodities, please remember to subscribe and smash that like button if you get some value out of this video. Let's break it down here. We've got the biggest market in the world, the SP500 large stocks, and in many ways, this dictates what other things are doing in the world. So here we have some of the biggest tech stocks, and they are getting obliterated. Amazon down 5.62, Apple even down, and that's been holding very well. And one of the ones that we have been cautioning against, Nvidia down 7% on the day. Financials, yeah, it's not so good either. So let's break down actually what happened for the session and where Wall Street were being a little nasty. So I think first off, we'll go to the hour of power, the hour of retail power. The first hour on a Monday session or a Tuesday session is always a little bit brutal. And what happened here was the market opened, it rallied a little bit, probably got a whole bunch of people waiting cautiously going, oh, I want to buy the dip. And then it just smashed them down. And unfortunately, Wall Street sold into the close. Little wonder that the Nasdaq was down the most. This is still an attack basically on growth stocks versus value to a degree. And of course, we also have a huge amount of commodities that are moving up, which is helping, cushion things like the Dow, IWM, and S&P 500. But Nasdaq was down 3.75%. If we move over to the actual sectors, it was a bad day for jets. Why? Because travel becomes obviously a little bit less likely during these kind of times of war, let's call it. And also, we also have a massive spike in costs across the board, including fuel price. So fuel is just so expensive right now. And as soon as jets, I would encourage anyone, go and have a look at jets on a support resistance. As soon as it fell through, it actually was the best short of the day because it was a phenomenal move and the market and algorithms went out of control. Now, we've talked about on this channel the thing that we like. We like TAN at the moment. We like GDX at the moment. But what we haven't brought up, well, I have with the private community, but I haven't brought up here, was utilities. So we'll talk about that a little bit later. But these were the strong sectors. These were the weak sectors. It's a tale of a few different markets at the moment in the market itself. When we think about also what's going on, we want to understand when are the smart money, when's the big guys actually starting to invest? Because when they start to invest heavily, then we know that it might be a good time to get into the market. Now, historically, insiders have been one of the key kind of indicators of strong buying. We saw insiders purchase most of the last dips, and obviously 2020, they purchased incredibly hard. They haven't come out yet. So if you haven't followed us over on Twitter, these are some of the things that we share at FX Evolution. So definitely come and join us over there. Now, before we mention this idea of utilities becoming good, and one of those is because it can be seen as a bit of a proxy for bonds. It doesn't really have much correlation with anything in particular to real GDP or anything like that. And it's one of those sectors that I would call it neutral and can be picked up during times similar to consumer staples during times of uncertainty. And this is the first time we've seen utilities really start to get hit with some nice aggressive power in the last couple of days. Everyone's in materials, everyone's in metals, everybody's in oil and energy and all those types of things and defense stocks, but they're not necessarily in this one. So it's interesting to see that follow through. And I think that's what the channel's all about. We're trying to spot things as and before other people start to spot them, because it's very key to be able to do that as a technical analyst or an investor. We've also talked about this whole idea that if oil starts spiking, it can be a bit of a precursor of a recession. Certainly that is what is currently being seen here, but I want to remind everybody that there's always a bull and a bear case. Now, the bulls have a little bit less case than maybe the bears do at this stage, but the average kind of recession or ex-recession kind of periods is about 15%, similar to where we are right now with the S&P 500. Upwards of 20%, which is one of our kind of worst case scenarios here, being 3,800 on the S&P 500. This level here should include a lot of buying if it ends up happening. So remember, since 1965, this is a big stat, historical S&P 500 corrections without recessions have tended to be around that 15%. Now, how do we tell a recession is coming? Well, some people will say, Tom, it's already here. Isn't it obvious? Sure, there are so many bad things in this weird, wacky economy that you could definitely make a case for it. And as I said, the bulls and the bears have incredible cases here. You could almost put you would almost have the pendulum or the weight on the bear side at this stage. But historically, 10 to 2 year spreads, treasury yields, have been a good indicator of a canary. We're still not technically down here. We're actually less than this now. We're getting closer by the day. But when this happens and you see 2 years invert against 10, this tends to be one of those early canary signs that yes, a recession is coming. In fact, it calls all the recessions in the past for a long, long time here. And big reason of this is because the Fed control, remember, the current rate. Okay, so the Fed control the current or the short dated rate. The market controls the 10-year. Just let that really sink in. The market controls what it's actually thinking, and the Fed's over here trying to control the current. So if the market says, oh no, we're sick, we don't think this is good, who's going to be probably correct? The Fed that gets it wrong all the time, or the market that tends to actually know what the hell's going on to a degree? I would say the market understands. The Fed is usually behind the curveball here. I mean, remember, they were looking for peak employment to cut away all of their money from the market and stimulus. It is technically a lagging indicator. So, even Druckenmiller said that is ridiculous. And did you just hear what I said? And I was watching an interview with him, and he was certainly cracking it about that because he was very unhappy with the Fed currently. And fair enough. If you understand the economy, I can see why. So the US 2-year, 10-year, we're getting closer to that point where we're getting that inflection point. We haven't found it yet. And remember, if you're somebody that likes buying the market, one of the ways that you can do that, other than just using technical analysis and obviously fundos to make sure you like your company, is that you can also look at times of maybe peak fear. Now, historically, if the stocks in the S&P 500 are below or above the 50-day moving average, if that falls to something like a 10%, remember, when that happens, it tends to be a peak level of fear. So you think of this as a bit of a fear indicator if you're looking at buying. The VIX, which is the fear indicator, has continued to rise, 36.47. Wow, that's huge. This thing is massive right now. And on the daily close as well, it's up there. So it's currently holding a bit of a trend line. I've been a bit of a critic in the past, and I still am, of the VIX being a easy technical trade. I don't think it's as easy to technically trade the VIX. It's easier to look at the S&P 500 and trade the VIX accordingly. So if the S&P 500 breaks past a key level of support, well, yeah, you probably want to be getting on that VIX train to the moon. You can pick which one you want, and that's the way I like it. But we're back up here at the 37.5 resistance. So very key level. If we breach through that, the VIX could go crazy. At the same time, the S&P 500 will be most likely testing a new low. So that means getting through that 4,100 area we'll take a look at soon. PCC, put call ratio. There seems to be an equal balance between puts and calls going into the market at the moment. So not much information coming out of this one. Let's move over to gold. So look, I got to say congratulations to people that have had the faith in the gold trade. It's been a pretty good run actually since February, and we've been obviously talking about it since December into February into all these periods. So we've been fairly bullish here on gold, on not just the seasonal but also some of the things that we were seeing in the economy. The value wasn't necessarily there in the growth stocks as much as it should have been. So the market here has gone very, very bullish, and we've hit a whole bunch of different levels. So it's still pretty good technically. We've had some good ones over the last week. So we obviously had the breach out here of the 1950. We suspected that it would breach this zone just because of the way it pulled back. We had this one here at the 1922, and now we've got the big 2000. So if it breaches through 2000, next step you would think is to go and test the previous high, which is sitting around 2070. So gold's still there, but just be warned, at this stage, it's very, very parabolic in the metal markets. So I would see that gold could also be a little bit, let's say, it could get affected by what's going on here. We're starting to see the signs of erratic market decisions in things like palladium, in things like even US oil here. Let's talk about oil. So the previous resistance became support. It's bought off it. If you're feeling bullish on oil, this is a key level here, which is sitting around the 121, let's call it 80. area. If it breaches through there, then it's kind of said, okay, we do like this zone and we like this price and we're ready to go forward. And you'll notice the 4-hour 20 moving average has been kind of a little bit of support for it so far. So be warned though, this is not a technical trade as much as it's a news trade. Depending on what governments do around the world will really dictate what's going on here. And it's one of the things that I don't like so much about the oil trade right now from a pure oil is it is incredibly wild. Like think about what just happened. It shorted 9.53%. Believe me, in these types of things, they can short a lot more. Like if you look at something like palladium, which has been a very aggressive trade to the upside, went up about 40%. It was actually the best trade. It just dumped 16.75% and then started recouping. That is not good. So this is what's happening here in the commodities markets. Be careful out there and certainly pay a lot of attention. Let's move over now to Tesla and we'll talk about the daily close here. So firstly, the daily close closed around $800. Now for people that bought that low, I kind of can't blame them. The chances are after a big 3% sell-off, statistically, we generally see a small pickup in the markets. Like we usually see some little bit of pickup and then obviously maybe another sell-off. But we do usually see a little bit of bullishness in the markets. That's just statistics. If you think about what's happening here, it's 800 and there's a nice little potential trade here for traders in the next day. If they can find it around 800 and it does end up bouncing, where's the next logical stop? Well, I would argue around this 828 level. Why? It's a key level of support. Let's go to the 1 hour and have a look at it. So look at this. Look at all that. Go down to the 15-minute chart, which is where a lot of day traders will be. Support, 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 support. Wow, what do you know? Little bearish candle here. Great short, by the way, if you got hold of that one in the last day. And bang, straight through down to the next level of support. So 800 to 828, something like this could be an interesting trade. Obviously it breaches through there. Well, that's a good sign for the bulls. But if it gets underneath 800, unfortunately, there's not much support here till 700, similar to the last time over on the left, which we got right here on the channel as a community. So yeah, that's what's going on with Tesla. If it hits 800, if it bounces off it, it might have a little rip. But then will it sell off this level? Well, I'd be looking for signs there as well. And remember, being reactionary to the position is probably one of the best courses of action at this stage in these markets. Let's take a look at Nvidia. So it's another one that I've been pretty negative on. Well, specifically, I've been negative on semiconductors at the moment, which is tough to do because semiconductors are such an amazing sector. And if you've been in that and holding it as an investment, I mean, you'd be crazy not to love semiconductors. They've outperformed the market easily. But let's have a look here at Nvidia with the trend line. So we've got this massive trend line coming through. It all kind of hits around $200. So you've got this previous support, $200. Obviously, we know Nvidia's been much higher than that. It's been as high as, what is this? 344. So that would bring it from a top to down to the low of around 42.64%. Wow. But that's because this stock went parabolic, it went very, very aggressive and then ended up, coming into its problems over here. So $200, very nice level, previous support, previous trend line, certainly something worth watching. And I think also if you bring this in with semiconductors, the index or the ETF that broke below, this could be going towards 223. So you'd be really looking at pretty much having these all time together. So if Nvidia was hitting 200, is this hitting 223? Would that be a good buy zone? I'll let you guys make a decision on that. Certainly an interesting area. Now, I mentioned before XLU utilities, and yes, utilities started breaking out last week. So it just pays to obviously look at rotation in markets. That's something I teach in the mentoring course. I go crazy about it because it's one of my favorite things to do. But utilities here, and there's other things you bring into it, but utilities here is having that nice kind of breach out. It's at the resistance now, some strong sessions in it. And because of the way it's consolidated, you'd think this thing breaches this high. So it just shows you again, the market's moving into proxy defensives, and it's actually doing it at a time of year that utilities tend to run. I mean, look at this. March, April is a good combo meal deal in terms of the last two months. I mean, you get usually a lot of strength coming in here from this sector over this period. So it's something that's interesting. Some other things that are going on with the economy. Let's get into the indices. Let's just get into some of the bigger problems that we see on the horizon. One of them is financials have actually broken underneath support. And this shows you that it's not just all about tech anymore. This is about a literal market sell-off at this stage across many sectors, including the financials. It's spilling into those. Another thing that we've seen is S&P 500 performing very well versus the DAX. The DAX has had max fear on it, and it had so much fear in the European market. Like, they're down. You look at the DAX. In fact, I'll bring it up here. Have a look at this. You know, you want to talk about what's happened to the US market. If you'd shorted the DAX, you've done a lot better. That is down very heavily. And I don't even know if it stops here or it goes all the way down to this kind of 11.5. And that would actually work well with something like the S&P 500 to 3,800. Think about that. But this has been the market that's been incredibly weak, if not completely oversold at this stage. So we'll find out what ends up happening there. But something you should be paying attention to. Remember, find the weakest. If you want to short, find the weakest market and short it. Don't try to fight too much behemoths. And I know I say that after I'm fighting Nvidia, but that's probably a mistake on my end. Yeah, I should be really shorting the weaker kind of hyper growth stocks more than those. Let's move over. Anyway, that's all in the past. Nvidia's done fine for me and it's all good. Thank you very much, Nvidia. US 30 over here. Yes, this is another type of Wyckoff. Now, the problem with the US economy right now is if this breaches underneath, this is a really bad pattern setup. And we've been talking about this now for a couple of weeks. Does this mean that all of a sudden the US market is going to start playing catch up with what we've seen on the DAX? Because what we've seen on the European markets has been much more brutal. And we talked about it. If we get a 3,800 on the S&P, it's probably going to force something like the Dow into something like 30,000. So this is a very big possibility here. And that's actually a further 10-ish% down on where it is currently. So we just need to be constantly watching this. If it gets underneath this last low, if it closes a weekly down here, we're going to need to be very vigilant on what's going on with the Dow, because the Dow is kind of showing us weakness here. As always, the IWM, the small cap companies, continue to show weakness. We are not underneath 187. I wouldn't say this market's currently leading. This is not the market that is currently leading in terms of falls. The Nasdaq's leading more than this one, but certainly IWM weakening. We've got that support at 188. And if the market gets back above 210, then we're feeling a lot more bullish about everything going on. So these are two very key levels here. Let's move over to the Nasdaq. This is where all the party was starting. And it was a fairly decent trade day, actually, if you'd stayed around. But let's think about what's probably going to happen now. So the problem with the Nasdaq, we've got a 13,050 support. If it gets below there, let's just go back to that weekly for a second. Where's the next stop? Well, you'd think it's going to be somewhere around this 12,200, 12,300. So quite a large continuation fall if it gets through this support. Are there going to be buyers here? You would have to think there would be at least some temporary day trade buyers there. It's unlikely it's going to fall through here easily. It's just unlikely to do so. Let's bring up the futures, though, to get a bit of an idea on what may happen in the next session. So this is something that I could see happening. Go up to something like the 13.5 level. Retest it similar than it did the other day. Look at this. Support, support, support. Very clean short here on the Monday session. Absolutely phenomenal. And here we have the potential of another short coming back through and pushing down. Now, if it breaches through here, so let's say it does something like this, what all of a sudden you might be doing is actually looking for a bit of a long. Now, we're in the point of very little support here. We don't have much structure or anything in the markets. So that's certainly a possibility. If you're feeling bullish, I'd wait for it to get through here. That would be the technical way of doing it. And all of these things are kind of worthwhile paying attention to. S&P 500, another fantastic short through the session. You know, as soon as it broke underneath here, look at that, bam, straight under 42.84 and off it went, and it went pretty damn hard. And this is all in the one session. So it just shows you again why technical analysis does work when you find the right zones. 4 times support, breaks through, boom. That's why it goes down. Is there any support here? Ugh, not really. I mean, it's the 4,200 zone, I guess, but we've still got that low down here. And if it rallies back up, what could you expect to happen here? A very real potential of further shorting pressure. So it could be still the short the rips is the discussion that most people have been having. It's what we've been talking about now. Other than that very special occasion over here, most indicators still leading down. Follow the price action. That's the best way to go. Our opinions don't mean much because there are so many inputs in this market right now. It's really tough to understand it. Like, I mean, we've got news going here. We've got invasion stuff. We've got crazy commodities. We've got broken system. We've got the Fed saying nothing. I mean, it just gets out of control very, very fast. So the best thing to do is just follow that price action. Bitcoin holding amazingly well. The crypto market's actually doing very, very well here. 37,000, pretty strong. I would say it's holding the zone it has to hold. It's got a little long leg doji on it on daily, so maybe for bulls, if it gets through here, you might feel a lot better about it going back up. But at this stage, we are at critical point. Gets underneath, back to 32, gets underneath that, obviously 30 gets tested, and underneath 30, bedlam. That's when you start talking about 20K Bitcoin. So these are the key levels. I've got them highlighted. They're the zones we're looking for, and you're currently at the support as much as you can be. Let's take a look at the news for the week ahead. We've got the JOLTS job openings Wednesday, 9th of March, and then we've got the core CPI data coming out 8:30 a.m. Thursday, New York time. This is Thursday, March 10th, and monetary policy ECB press conference. I think that's actually pretty important right now because, as you know, if you've been following currency at all, the euro is getting tanked, and that means that everyone is just running out of the ECB. So let's see what they talk about there. That's going to be a big one. And then we come into the prelim UOM consumer sentiment. So I think Thursday's the big news day here. This is the story, including the normal news that we're seeing coming through. That's some of the economic data we'll want to be watching. If you enjoyed today's video, please remember to, of course, subscribe, smash that like button, and we'll see you in the next one. Bye for now.